David, do we believe that companies are really going to move away from capital returns, buybacks and dividends to more capital spending, increased Capex and bigger M&A activity?
We're just off camera talking about it, how some of that's going to happen because the level's been so low. Ben made that point. But how much of it happens depends on what opportunity that company sees. And to see that opportunity when we're a 70% service sector U.S. economy in the structure we're in now is questionable. We get some, we don't get a lot.
Well, some people would look at that CVS Aetna deal and say that actually that was defensive. That was about fending off potentially Amazon coming into their neck of the woods. So is this going to be defensive M&A or offensive M&A?
M&A is depressed. I mean, US M&A levels down 20% year over year. So I think we're certainly due for a pickup. We'll get a bit of visibility, I think, with the tax reform that will allow that to accelerate. I mean, US corporates are sitting on a lot of cash. They have a lot, they're sitting on high multiples. I definitely think we're going to see a pickup here. I think we'll see something on the Capex front. I suspect, and a little will go a long way, given that US Capex is the most depressed in the world, but I still think most of it goes on share buybacks.
So Capex depressed, but cash levels are high. It makes you wonder whether dropping a corporate tax rate is going to really make a difference to changing this narrative. Whether you go down to 20 or 22, is it going to change the story?
I don't think 20, 21, 22 changes anything. There is a little sleeper secret coming out of this tax bill, if I can segue to the munis for a minute.
Please do.
Okay, so here we are today with a 270 taxable 30-year U.S. Treasury and a 4% plus housing authority bond being rushed to issuance because of the tax bill that is tax-free. And behind that bond is a basket of mortgages guaranteed by the federal government. And that's being issued right now in the high-tax SALT states. It's the bargain of the century. And it's coming to market, into a market doesn't want to look at it because they're too busy looking at the stock market. 4, tax-free, gross it up to 7, no matter which tax bill you get, against a 270 taxable 30-year Treasury. That's the cheap sector in the market.